Concerns over a cryptocurrency collapse ease as the U.S. Treasury downplays Trump tariff refund risks. This week, global financial markets saw rising concerns about the possibility of a broad market shock, including the risk of a sell-off in the cryptocurrency market. These worries stemmed from investors closely watching whether the U.S. Supreme Court might overturn tariffs imposed during the presidency of Donald Trump. The main concern centered on a potential scenario in which the court orders large-scale tax refunds, forcing the U.S. Treasury to inject a significant amount of liquidity into the system. Such a move was feared to disrupt the bond market and spill over into risk assets such as cryptocurrencies. However, the U.S. Treasury quickly moved to reassure markets. Treasury Secretary Scott Bessent stated that the government has sufficient liquidity to handle any potential tax refunds. He emphasized that even in a worst-case scenario, refunds would not be paid out all at once, but instead spread over weeks or months, thereby reducing the risk of sudden liquidity shocks. Bessent also noted that the Treasury has prepared in advance and does not expect any refund process to disrupt government funding or financial stability. In addition, he pointed out that there remains uncertainty over whether the Supreme Court will ultimately overturn the tariffs. Beyond liquidity concerns, the refund process itself could be complex. In many cases, it is unclear whether companies that initially paid the tariffs would pass the refunds on to consumers, meaning that the return of funds to the broader economy could be slower than expected. Market fears of a potential collapse linked to tariff rulings began to ease after the Supreme Court postponed its decision. Combined with the U.S. Treasury's strong cash reserves, these developments have significantly reduced systemic risk. For the cryptocurrency market, the threat of a sudden liquidity-driven crash at this time appears to be limited. According to BlogTiNow,